All right. Now, one of the greatest strengths you will have as a Forex trader is your ability to analyze the market. We say there are three types of analysis. There is technical analysis, fundamental analysis, and sentiment analysis. Now, emphasis here is going to be more on technical. There is the fundamental analysis. I'm going to show you how to trade news if time permits us today. If not today, by the next class, we'll do that. But today we're going to
Okay,
go
sir.
real raw into how to analyze the market. We've done a lot under technical analysis. I've taught you support and resistance, candlestick patterns, chart patterns, and many other things like that. It's time to put those things into real practical use, to generate trading signals. For many newbie traders, what people look out for is platforms where they can get free signal. Is it good to get free signal? Well, if you get it, it's all good, it's all bad, as long as it's delivering. But the truth is that depending on signals will make you a lazy trader. Have you been joining signal platforms before?
No, not really, sir.
Okay, that's good. It's good you've not been doing it, because some people, that's all they want quick money. So everybody wants money. We're all doing this because we want money. But if you depend 100% on signal channels, some join Telegram channels where they give them signals, where they'll just tell them buy stop, sell stop, and that's all. And they feel they are okay. That's a lazy way of trading, because that person will never grow as a trader. If you want to know how this business really works, the first thing you need is your ability to analyze the market, ability to decode what the chart is saying, to know where the market is going. Now, if you know what the chart is saying, you will know where the market is going, and you can now trade in that direction to make profit. And to be honest, to make the best way is to even make it as simple as possible. Me, I don't believe in teaching complex strategies. It's not complex. My job is to make it simple enough for you to understand, then run with that information to make profit in the market. Now, for me as a person, there are things I look out for when I want to place a trade. Let me just quickly go. I'll open a slide now. I'll type it in a slide so that you can always reference what I'm about to say. So let's go into a slide. Now, you can see my slide, my PowerPoint slide, right?
Yes, sir.
Okay. Things to look out for before placing a trade. Now, when I analyze the market, these are the things I do. These are the things that falls under my analysis, and which determines a lot why I'm placing a trade, whether I'm placing a buy trade or a sell trade. Number one thing that I look out for, before placing a trade. Number one that I look out for support and resistance. Support and resistance. I look out for support and resistance. That is the first thing I look out for. Support and resistance. Number two, I look out for trend lines. Number three, I look out for candlestick patterns. These are all the things we've done. But like I said, this is the practical side. Candlestick patterns. Number four, I look out for chart patterns. And number five, sometimes Now, these are the four main ones. Sometimes I look out for what is called psychological levels. I've not taught you that, but I'll teach you. And finally, number 6, I look out for Fibonacci levels. So these are the things I look out for. For now, let the emphasis be on the first four: support and resistance, trend lines, candlestick patterns, chart patterns. Let's put our focus on that. Like I said, I have not taught you psychological level. I will teach you. And I've not taught you Fibonacci. I will also teach you. So let's focus on the first four. Now, if you can master all these things I've put here, you will generate signals by yourself without depending on anyone. I'm telling you, you will generate Forex trading will become a lot easier. It will become a lot easier if you can master all these things I've put out here. Now, all these things I put out here comes under what is called price action trading. Now, there are different schools of thoughts when it comes to Forex trading. I don't know if you've heard someone say they are doing a smart money concept. Some are doing order block. Those are
Yes.
different concepts. They are different concepts.
ICT.
ICT. They are all different concepts. Now, the best thing for you as a trader is to find the one that works for you and stick with it. One of the challenges of traders sometimes is jumping from one strategy to the other. You do ICT today, tomorrow you jump to smart money, next tomorrow you jump to price action. After that, you jump to another thing. No, if you're doing that, you'll be confused. And one of the best ways to learn is to learn from a mentor, someone that has a working strategy that is working. Learn it and stick with it, and you'll be fine. So while you are making your money with price action trading, you are not bothered about somebody that is doing smart money concept because what you are doing works for you. Because reason is this: if you want to match two types of strategies like that together, eventually you'll get confused. Because while price action is saying buy, smart money may be saying sell. You are looking at Euro USD. From your price action understanding, you know it's a buy. But smart money is saying sell, you'll be confused. So stick with one. Stick with one and just stick with one. That's just a simple way to trade. There is none of all the strategies are good. All the schools of thought are good. You understand? But they don't work exactly the same way. So trying to, walk around two or three of them will just get you completely confused. So stick with one that works. Like what I'm teaching you, that's why you're paying. I'm teaching you what works for me. It has worked for me for more than 5, 6, 7, 80 years. This is what I do as a Forex trader with all my years of experience. There was a time too when, I was running up and down trying to get what works. But the moment I found this price action, honestly, I stuck with it since then. And that is what has been working for me. That is what I has made me get the job I even do at PU Prime that you know me. It's this same price action. So it works. And it's one of the most accepted way of trading Forex. If you go online, it's one of the most accepted way that has been around for a long, price action has been around for long, way longer than all this ICT, smart money, other block. It's been around for way long than many of those strategies. So if it has stood the test of time, then it tells you that it's been something that has delivered over time. All right, so let's start. Now we're going to be doing analysis. Analysis. You are going to analyze. We're going to, now. Don't worry. I'm the one that'll do it first. You understand? So don't be. I'm not going to ask you to do it. The lecture today is for me to show you how it is done. Now, from tonight, I want you to start analyzing the market by yourself. Now you have a lap. I mean, you have a house by yourself. Possibly, I don't know. How about the light condition? I hope it's better than the other places you've been.
Yes, yes, the light is stable here.
Good, good. So with that now, you should be able to make use of that to trade Forex better. Now, from tonight, by 10 p.m., okay, tonight is Friday, all right. From Sunday night, every 10 p.m., I want you to be on the chart. Why 10 p.m.? By 10 p.m., the new day will start. On Sunday now, it will be the new week. You understand? Sunday, we are entering a new week on Sunday. So by 10 p.m. on Sunday, the new week is going to start. And it's always best to check on the candles especially the daily candles, as the new day is just starting. Reason is because when you check the candles at the beginning of the day, it is very clear to identify support and resistance levels. Now, what happens is this: when you can identify support and resistance levels at the beginning of the day, most likely when the day starts, the market will go in that direction. I have proven this as a trader many times. Many times. I'll show you something now. I'm trying to find something. Just hold on. All right, let's look at GBP. Okay, let's use the GBP USD. Earlier in the week, I gave an analysis of a bearish outlook on GBP USD. How did I come about that outlook? This is GBP USD on the daily time frame. Now, this is today's candle. This is yesterday. This is Wednesday. Okay. Firstly, we'll draw, like I said, the first thing I always do is I identify a resistance level. Is there any resistance level around this candle? The answer is yes. What is a resistance level? It's a level where price has not been able to break out above. So I picked my horizontal line tool from this side. I'll take you one step after the other. So I think that was, initial one was fast for me. So I'll come to, you know how to identify your horizontal line tool.
Yes, yes, sir.
Okay, good. That's the one I circled in blue over there. I'll click it and I'll drop it right here. Why here? Because you discover that the candles, all the candles are touching this tip, including this one and even this one. So that tells you that for a period since March, why am I saying March? If I take the vertical line tool, if you look at it straight down, you see that the date here is March 14, 2024. Since around March 14, price has not moved above this line. That indicates that there is a resistance in that place. We said when we did resistance and support, that resistance is like the ceiling in a house, while support is like the floor in a house. So when price cannot break out above a certain level, what usually happens is that price begins to decline the next day. The next day, price begins to decline. Price begins to decline. If price cannot break a resistance level, the next day, you start seeing a decline. Yes, there are occasions when it may not happen exactly on the next day. That may happen. But generally speaking, from the next day, even if it doesn't happen exactly on the next day, by the third day, you will likely see a decline in price. You know, it's like you train a ball to the ceiling. Usually the ball will fall down. It's only something like a chewing gum or something sticky that you would throw to the ceiling and it will get stuck into the wall, into the ceiling. Anything you throw to the ceiling will fall down because the force of gravity will pull it down. That is the same thing that happens to price. When price hits a resistance, it is expected to fall. When price hits support, it is expected to go bullish, to rise into the bullish direction. This is a valid resistance level. What is the resistance level? The level where price touches at least 2 times. By the time price is touching a level the second time and cannot break out above it, it becomes a resistance. Technically, you expect price to fall by the next day. So now let's take this. No, this is a resistance level. Now, the third time price touches that level, now it's possible resistance can be a straight line and sometimes it can be a zone. That's why sometimes if you see rectangles on the chart, what the rectangle is showing you is that that region, that is a resistance zone. That resistance is not a straight line like I've put earlier in that instance. It's a zone. Why am I putting a zone here? Let me remove this horizontal line, because if you observe right here, I said that this is a resistance, but this other candle did not touch that line. It didn't touch the initial line I put, but it's a valid resistance. The only way it can be resistance is if it's a zone. Why are we calling it a zone? If a straight line, let me make it easier for you. Let me draw back that line. Good. Now let's assume this line, you can see here is 1.28000. Now, please, I want you to know that when we're trading Forex, what we are trading is a fluctuation in the exchange rate of the currency of these countries that we're trading. For example, GBP USD is a fluctuation in the exchange rate of the British pound and United States dollar. It's just like we trading our naira against the dollar. It's the same thing. It's the same thing. Trading naira against the dollar. Fluctuation of our exchange rate when it went from 1001 to 1005, from 1002 to 2000. That's exactly what we're doing in Forex trading. If Nigeria were to be on the chart, we would have been trading it that way. But, we don't have our naira and dollar on the chart. Now, let's assume a scenario that happened recently in Nigeria when the exchange rate hit 2000 naira to a dollar. Now, let's take that level as a resistance level like you are seeing on the screen. Now, that is a whole number. In that instance, 2000 naira per dollar is what is even called a psychological level. That is a rounded up number. But what if price, when we're talking about a resistance zone, a zone could be that price at one time got to 2005 naira to a dollar. At some other time, it was 1995. In that instance, price will be seen as, the resistance will be a zone. That is exactly what this rectangle represents. So if you see rectangle in Forex trading, we are not doing one mathematical jargon. We are just showing you that resistance or support is a zone and not a whole number in that instance. So back to what I was saying, here we have a valid resistance zone, and this is the next time a candle, entered into that zone, but closed at the end of the day, without breaking out above that zone. So the next day after that, what happened? You can see that the market sold. Are you seeing it?
Yes.
Another time, price entered into that zone as if we are to maintain, if we revert back to the earlier one, which is the old number, in this instance, price actually touched the resistance line. You can see this small green candle touched the resistance line. This one is touching the resistance line. So the next day, there was a sell again. Again, this candle touched the line, but price closed below the line, showing that it's still a valid resistance level. So what happened the next day? Market sold a little, which was yesterday, and today it sold further. So now the question is, if you have identified this, let me identify another one so that we can get a better understanding. But I'm showing you the power of resistance and how to turn resistance level to trading opportunities. Okay, let's do another resistance before I go into support. Resistance turn support. Okay, this is another one. Okay, here again, we have another valid resistance level. Price, let's take this whole zone as the first time. Here, the bullish candle closed by touching the resistance. The next day, there was a sell. This one touched its retrace the next day, yesterday and today, another sell. You can see that this thing works.
Yes.
Another one here. This is another valid resistance. Resistance, resistance. This one touched it and closed as a rejection candle. Now, if you remember our class on candlestick pattern, we have different candlestick patterns. We have the shooting star, the hammer, inverted hammer, and all the rest. But then we say the candlestick with a long shadow and small body is called a pin bar or a rejection candle. Now, this one hits the resistance and closed as a rejection candle. Please take note, anytime you have a rejection candle hitting a resistance, please, the probability that it will fall is more than 80%. It will fall the next day. This one is more guaranteed than any other time that price closes at the resistance level. If it's a rejection candle, the likelihood that it will sell is very, very high, higher than any other type of candle that you see. So this one closed as a rejection candle. And the next day, what happened? The market sold. This one here closed as a normal candle, but the next day, we have a massive fall. This one hit the resistance one day, second day, third day. That is when the fall happened. Like I said, there are times it may not sell the next day, but most likely the third day, the sell will happen. And you see that the trade is triggered. So we looked at GBP USD, AED USD. Let's look at the third one. Okay, now let's look at the support. Here I have a valid support. Price needs to touch a spot 2 times for you to have a valid resistance and support. First time, that's that zone. Second time, a rejection candle. What happened? Price went buying. We've been looking at a resistance. This one is a support. I've seen another resistance again. This is a valid resistance, the first point. And at the second point, you can see that 2 days after, the market sold again. So you can turn all this information into trading opportunities. And you will always find plenty of resistance and support. As long as you're checking multiple currency pairs, you will find them. You will always find them. Now, I've showed you how to identify resistance and support. The next thing is, how do you trade this, resistance? Because it's one thing you've found it on the daily time frame. How do you make entry? Now, that you found it on the daily time frame does not mean you make entry immediately. Because if you make entry immediately, your stop loss will be very wide. Because this one now, I said it's a rejection candle. I expected it to sell. But sometimes it may first go buying before it sells. That can happen. So if you have entered just at the beginning of the day like that, it's possible you may end up having a wide stop loss, which may not be safe for you. So how do you enter a sell on this? Now let's identify the levels, the candles where we're looking for a sell. That's one there, 2, and 3. These are the places we've identified resistance level. Now, what we are doing now is what is called multi-time frame analysis. Multi-time frame analysis means going on different time frames to look out for trend and for entry. Using a higher time frame like daily time frame to look for the trend. Trend means direction. And going to lower time frame like 1 hour time frame to look for entry. So when you're going down to 1 hour time frame, what you are trying to do is that you are still trying to trade that daily time frame, or you want to make an entry on a smaller time frame so that you can manage your risk better, and so that you can even have a better entry compared to entering on the daily time frame. So we've identified the trend for all this setup on a daily time frame. We'll now go down to 1 hour to look for the entry. So we'll scale down to 1 hour time frame. Now, on the 1 hour time frame, the first thing you are going to try to find out is if there is a trend line. You find out if you can draw a trend line on the candles. That's the first thing you look out for. I said the things I look out for. I look out for support and resistance. I look out for trend lines. I look out for candlestick pattern. I look out for chart pattern. So after you have identified a resistance on the bigger time frame, daily time frame, you come down to 1 hour and try to draw trend line around the price region where you have identified that support and resistance. So here on the 1 hour, I will try to draw a trend line. Now, sometimes that trend line can evolve. It can go beyond the trend line, but let's just start with the trend line. This is a trend line. When price hits resistance, we expect it to fall. When price breaks out below a trend line, we equally expect it to fall. So we are working on technical, on price action principles here. So we see that eventually price actually broke below the trend line and the market sold. The other important thing you should also note is also how to use your RSI and possibly your MACD. MACD is not mandatory, but I just always put this on my chart for additional information. Now, at the point where the price breaks out below the trend line, you must always check your RSI. If it's a sell trade, your RSI should be below 50. Not should be, must be below 50 at the point you want to enter the trade. That is when the price breaks out of the trend line. Your RSI should be below 50. Then you can trigger a sell. That's example one. Let's go to the second one. On this one again, we'll try to draw a trend line. Now, don't ever force a trend line. All you are doing when you are doing a trend line is you are adding the most recent high and the most recent low. And you are drawing a line to connect them together. You need minimum of 2 of these low points in this case, minimum. If it is more than 2, all well and good. But you need minimum of 2 points. So you can see the second one now. I just joined this and this together. Then wait for the price. Now, this candle that broke out below the trend line is the one that is called the breakout candle. That is the candle you are going to wait for. Once you find this kind of candle that breaks out from within this axis to outside it and closes outside it, that is a candle that tells you that, the trend line is broken. Then at the end of this candle is when you enter your sell in this case. So what you are picking as profit is actually the movement down to this place. And like I said, you must also confirm that your RSI is clearly below 50 for you to trigger the sell. Now, there are times after doing all this, you may not have a clear trend line. If you don't have a clear trend line, you may choose to leave the trade, though there are other things you can still do. But let's still look at this one. Here, I still have a trend line in this case, though not as sharp as the other ones. This is still a valid trend line. It's still a valid trend line. I joined 2 of the most recent lows, and this is a third one. You can see that when price touched the trend line, it bounced off, then broke out downwards after that. So this candle here, let me enlarge it. This candle, this small candle there is the breakout candle. At the close of that candle, that is where you trigger your sell. And like I said, at that point, also confirm that your RSI is clearly below 50 and you can trigger the sell. This is a signal for today on GBP USD. And that was a very beautiful signal. At least this one generated about, let's see, generated about 90 pips, 92 pips on GBP USD today. We checked GBP USD. Let's go to AED USD. We'll do the same thing for AED USD. We identified a resistance level here. And we looked entry opportunity here, entry opportunity here. That's 2. So I'll mark it again. Then we also identified resistance level, the second line, and an entry opportunity here, a second one here. So I'll mark those 2 levels too. Now, it is the next candle after the one you've identified as a resistance point is the next candle where you're looking for the opportunity, because that's the next day. So I'm going to zoom down to 1 hour. This is March, April, June. All right. So I'll now click the 1 hour time frame. Let's start with the one in June. These are these 2 candles. Okay, there's the first one. Again, you draw a trend line. Now, it is possible to, we've done chart patterns. It is possible that it goes beyond the pattern. What you'll be seeing may go beyond just a trend line into a chart pattern, which is called a rising wedge. A rising wedge is when you draw a trend line on both the front and the back. That is a rising wedge pattern. So if you see me analyze, I do put a lot of rising wedge. It's just an additional information. Now, you can see that price actually broke out a little bit late. This is a breakout candle, and just like two candles, and there was a reversal. It is possible. But then there's another information me I'm seeing on this chart. I said I look out for resistance and support. I look out for trend line. Then I said I look out for candlestick pattern and chart pattern. Now, it's very important for you as a trader to understand the concept of candlestick pattern and chart pattern. It will give you cheap trades. In this case now, this looks like this trade didn't bring a lot of profit, but in the real sense, there is profit in the trade if we cited it earlier, because right here I can see the formation of a head and shoulder pattern, which led. So this one goes beyond even the trend line. It started with a head and shoulder pattern. So I will delete that trend line because the head and shoulder overrides the trend line in this case. And here is the neckline of the head and shoulder. So the candle that breaks the head and shoulder pattern is this candle. This is the breakout candle. So at the beginning of the next candle is where you trigger a sell. And the trade went as far as, let's check it out, went as far as about 34 pips. 34 pips is not bad for intraday trading. It's just good enough. So you can see that here now, we can't be rigid. We are not the one that is controlling the market. We can only take what the market wants to give. And that's the truth. You can't take what the market is not willing to give. Here, what the market is giving us is a chart pattern. So we have to take it that way. Now, if you don't understand it as a chart pattern, if all you know for now is trend line, please stick with trend line. Me too, I didn't get to the point of merging all of them together in a day. It took me a while. So if all you know for now is trend line, stick with trend line. Over time, you can add, other things. But on this analysis, I'm telling you what I'm seeing. Now, on this second one, let's see. Now, sometimes the trend line may not be too accurate. It's not the best to have a trend line that is flat like this. Your trend line is expected to be a sharp angle. So when you're having a trend line that is a flat one, honestly, just avoid it. Avoid anything that's a flat. If you need to ignore that trade, ignore it. Now, this one, I've been able to find two spots, though for me, I may not really have taken this kind of trade. It's still valid. With these 2 points, it's still valid because price still broke out below it and it sold. But if you could not find these 2 points that I found, to have another, the one I drew earlier will have been the option you will have. In such instance, I will advise maybe you just ignore it. If it's going to be flat like this and you're expecting price to break out, you see that most of the move has taken place in this case. So this kind of scenario, please just ignore. Look for a fresh trade. But preferably, your trend line should be sharp. It should be a sharp angle. If you go backwards, so the month of March, where I cited the other two, yes, you can see the first one, and here's the second one again. All right. Now, in this case, let's see, let me expand it. Good. In this instance again, drawing a trend line seems not to be possible. Now, the truth is that when you're doing analysis, you will see more than one currency. So if you need to let go of some because they are not too clear, you can do that. You can let go if it's not clear. This one is not clear. But then I will go back to the daily time frame. This is the rejection candle. I'll show you another way to trade rejection candle. So if it's on 1 hour, you can't find it. Don't worry. That is not a problem if it's a rejection candle. You can go back to the daily. But let's go on the second one. Yeah, this is the second one. And here we can actually draw a valid trend line. Now, the trend line here, this is valid, but always keep your trend line close to the current price. So I will go rather with this. This is closer to the price. This is a low, a lower high, sorry, a higher low rather, a higher low, a higher low, and price broke the trend line here. It broke out, tested the trend line again. Now that can happen also. When price breaks out, it does not mean it will sell immediately. There are instances when price will break out, sell a little, retrace back to test the trend line before finally dropping. And that is what happened in this case. Now, when it breaks out, should you take a sell? Yes, as long as at the time of the breakout, you can also wait and see that your RSI is clearly below 50. Now, in this case, at the breakout, RSI is not below 50. You can see, excuse me, RSI is above 50, so you can't take a sell. Please always follow these rules. It's important. Don't say, oh, the candle has broken out. Let me quickly enter into a sell. No, wait for the RSI to be below 50. And it seems here that there was a news that pushed this down. So it was the news that pushed the candle below, that's in the RSI below 50. So at the next candle, if you are not trading the news, if you're trading the news, I will show you news trading strategy for that. But if you are not trading the news, then you wait for the close of that candle. And if you entered at the close of that candle, at least this went as low as about 58 pips, which is still 56 pips, which is not a bad trade in any way. It's still a very, very good and very valid trade. Now, like I said, I'll go back to the daily time frame now and show you how to trade rejection candles if you can't find a clear entry on a lower time frame like 1 hour. That doesn't mean that it's over for that rejection candle. No, it's not over. This is a resistance and this is a rejection candle. Now, for rejection candles, another way to trade them, you can trade them from the daily, only rejection candles. And this is the way to trade them. I'm zooming it big so that you can see it. Now, here, the tip here is the most recent low of that rejection candle. You can see where the tip of the candle is touching, where I drew the line. So what happens is that if price breaks out below that level in the new day, in the next day, it means it's going to sell. So what you can do sometimes, at the beginning of the day, price will be somewhere around here or somewhere around here. So you can put a sell stop. All right, so like I was saying before the zoom went off, at the tip of the candle, you will put a sell stop order. Do you know how to do sell stop?
Yes, sir.
Okay, that's a pending order. So you can do that overnight, since you know already it's a rejection candle, and go to bed. And by the new day, when price eventually gets to that level and breaks out downward, it will trigger your trade. So that one is a way you can trade rejection candles without having to, babysit the trade. That is to keep watching it. Just put a sell stop pending order if price hits the rejection or the resistance level. And if it's on the support level, you put a buy stop order. For example, now, I have another example I want to show you. Like if I draw this line here now, this is a valid support level. And then a candle is a rejection candle. So if you observe this in the night, that's why checking your charts in the night is good because you can clearly see the direction the market will go the next day. So in this instance here, let me remove these two lines so that it doesn't confuse you, so that we can focus on what we're talking about now. If you put your buy stop at the tip of this candle, you can see that during the next day, price first of all sold before it broke out upwards. It will trigger your buy trade and it will trigger you into profit. If you want to trade rejection candles on the daily time frame. But if you still want to go down to 1 hour, that is still possible. So let's see if we can still go down to 1 hour
Sir, please,
easily.
there is what,
There is what?
sir.
I'm with you.
Yeah, I want to ask if, yeah, concerning this rejection candle, if I want to put stop loss,
Yes, that's a good question.
how
The
am I
stop
going to?
loss is best placed at the tip of the most recent low, at this tip
Okay,
here,
okay,
for a sell trade. Yes. But I tell you that most of the time, price will not get to that level. Now, see in this case now, you put buy stop here. Most likely, the day began somewhere around here. It retraced. You'll be in minus. You understand? But it goes back up. It will not. If you put your stop loss too close, price will hit it. But if you put it at that low, now the question now is, what if now let's use our crosshair to know the number of pips of that level of that spot. That's about 23 pips for this currency. This is AUD/USD. AUD/USD is not a really volatile currency pair like that. Let's just say it's like 25 pips. Now you may be wondering, can I risk 25 pips? What if I just use like 10 pips? I tell you that your 10 pips will be hit. Just follow the rules. If you are using stop loss for rejection candle, it should be at the tip. It should be at the tip of the candle. If it's on the other side here where you have, we're looking for a sell stop, your stop loss too will be at the tip here. So that if price retraces within the course of the day, it will still come down without hitting that stop loss. But if you put the stop loss so close, price will hit it. Most likely, it's going to hit it. So if the stop loss is now too wide, because that is possible, how do you handle that situation? Like here now, stop loss will be about 50 pips. Can your account carry 50 pips? Now, if that is the case, what I encourage my students to do is to reduce your lot size. If your stop loss is looking large, reduce your lot size, your stop loss, as in the effect of the stop loss will also reduce. For example, let's assume you are trading with a $500 and you have a stop loss of 50 pips. Maybe you are trading with 0.1 lot. Now, I don't encourage you to use 0.1 lot for $500. So if you're using 0.1 loss on $500, 50 pips, that is 10% of the account. That is so large. But if you reduce your lot size from 0.1 to 0.05, that is half of the initial lot size. Instead of having a 50 pip, which is a $50, your 50 pip will now be valued at $25, which is 5% of your account. That is still easier to manage than a $50 stop loss. Are you getting it?
Sir. Yes, I'm getting it.
All right. So if you ever check your stop loss and it's looking large, don't say you will not take a trade because the stop loss is wide. Just reduce your lot size. Reduce your lot size. It will just cater for that large stop loss. It will reduce the financial worth of that stop. The stop loss will still be 50 pips, so but the value will change from $50 to $25 or a lot less. Let's say you now use 0.03. In fact, that will even drop it to like maybe $20 or $15, which is very safe for the account you are trading. So that's how you manage that. All right. So, okay, I was trying to show you how we can still trade this on 1 hour if we want to. So you mark the beginning of the next day. So we'll go back to 1 hour on the 6th of March. On the 6th of March. This is 1 hour. Sorry, I didn't know I muted. So this is the trend line. We've drawn the trend line, and this is price breaking out above the trend line. So you can see there's a sort of a range around this place. When you see candles clustered together is a range. But price finally broke out of that range. So let's say we want to look at our entry at this candle that is clearly above the trend line. Then you can see that price went as high as about 129 pips after the breakout because of the rejection candle. In fact, there are some people, what they do in forex trading is just try to identify rejection candles, and that's all they trade. I'm telling you. Yes, they may not get trades every day. See, the goal of trading should not really be to trade every day. If there's nothing valid you are seeing, there's no point being in the market. The higher you go in trading, the more you know that it's not really about trading every day that counts. It's about trading high probability setup. That should be your goal. But as a newbie trader, I know you want to explore and maybe you might still be new. Some of this concept may still be a little bit difficult to understand. I admit you feel like that. But as you grow older in the business, it's not that you will trade lesser, but you'll be more accurate. For now, just try to understand the market flow, try to understand what I'm teaching you, and try to place trade in line of what I'm showing you. Now, I've only showed you that price went as high as between here and this place. So the question is, how sure are you that price will get to that height? That's not how you know. So one of the ways to set take profit levels is to use your most recent high. I've showed you how to make entry. I've showed you how to place stop loss. What I showed you on how to place stop loss with the rejection candle is still what works for stop loss generally. Your most recent low or your most recent high can be your stop loss, and it can also be your take profit. In this instance, this point here is the most recent high on this trend line. So we can as well make that level our take profit. That if price breaks out from the trend line here, I target this place as a take profit. Now, this is not the only way to set take profit, but let's just take that for tonight. I'll still show you other ways. That's 50 pips. 50 pips is very valid. I mean, it's a good trade. On 0.1, that is $50. On one standard lot, that is $500. But please, one standard lot should only be traded on $10,000 accounts. Please, it's very important. Don't trade one standard lot on 1,000 or 2,000. It's risky. One standard lot should only be placed on a $10,000 account. On a $1,000 account, you can still trade 0.1 lot. So I still advise to be very cautious with that, but you can still manage 0.1 lot on $1,000 account. It's still manageable. So if you had a $1,000, you can trade 0.1, and this will have given you $50, which is 50 pips. And that same way, you can use most recent high as your take profit level for any trade you take. Like I said, it's not the only way. There are other ways, but let's still take that, for tonight. Like this other one that I showed you earlier, you can use the most recent low. You can even use support and resistance. Now, most recent low will not work here because this is the tip of the candle and the candle just broke out here. So that is not going to work. The next most recent low is this level. This is what is going to work. And you can see that price came down, retraced, and still eventually went to that level at an average of about how many pips now? About 78 pips, which is not bad at all. Then I showed you New Zealand JPY. For New Zealand JPY, okay, this is the candle we looked at. I said I found a support and a rejection candle, and you can see that price just broke out. In fact, there is a resistance above, which can be used as a take profit level. You can use the resistance level up there, as a take profit level. But let's go down to 1 hour and still try to analyze this further. So this candle was formed on the 22nd of April. So I'll go down to 1 hour. I will look at the 22nd of April. All right, so this is April 22nd. Oh, okay. All right, so that's the candle. Why is it changing? Okay. All right. So we can draw our trend line if you want to, or you can do a buy stop. If that's what you want, you can do a buy stop. But then a trend line still works in this case. The most recent high downwards. And we can see a breakout. This candle, at the close of this candle, price broke out. Price went up, a little dropped, then went to hit that resistance on the daily time frame. So how many pips did that generate? This generated about 58 pips, which is really not bad. Or since it's a rejection candle, you can as well still go back to that daily time frame and put a buy stop order at the tip of the candle. And that will just be at this level, anticipating that price, will break it as it pushes up on its own. All right. Any question on all this?
No, sir. No question.
Okay. Now, I don't want to load you too much. We're going to stop here tonight, but I'll give you an assignment. Yeah, when I gave you the assignment of support and resistance, you did that, and I'm quite impressed. Now, this is weekend. This is Friday. On Sunday night, the new week is going to open. I want you to put what I've taught you tonight into practice. Go on your
Okay, sir.
MetaTrader at 10 p.m. in the night, identify resistance levels. When you identify it, take note of those currency pairs that are at resistance. Then on Monday, look for sell opportunity. Go down to 1 hour, draw a trend line, wait for entry. But trace that support level, identify the currency pair, write it down. On Monday during the day, wait for a breakout in the bullish direction, go down to 1 hour time frame, draw a trend line, and wait for a breakout and trade it. So that's going to be your assignment. So on Monday morning, I want you to give me, if you want to screenshot. If you want to do that, do that. Yeah, I think it's better. Do a screenshot of the price of the currency pairs that you found at resistance level and support level. Send it to me so that we'll now know whether it goes in the bullish direction or bearish direction as required in the course of the day.
Okay,
Is
sir.
that okay?
Yes, sir.
All right. So let's stop here tonight. We'll continue again on Tuesday.
Okay, sir. Thanks, sir.
All right. You're welcome. Bye-bye.
Yes, sir. Good night.
Good night.